UnitedHealth Group, a stock I personally own and have been following for a while, has certainly seen better days. But recently, things took an interesting turn. The company just released its latest earnings report. After several quarters of pressure from rising medical costs and investor concerns, this report might finally mark a turning point. So in this video, I'll go through the company's latest earnings report, I'll analyze UnitedHealth's financials, and of course, calculate its intrinsic value to see if it's still worth buying today. Now, if you enjoy these kind of videos, consider clicking the like and subscribe button. We're getting really close to 1,000 subscribers, which is a huge milestone, and your support truly helps to grow my channel. Now, on to the video. In their latest earnings report, UnitedHealth said that medical costs were lower than expected. They even raised their profit outlook for 2025, easing fears that have weighed on the stock for over a year. The big issue for UnitedHealth and the whole insurance industry has been an unprecedented medical cost environment. The company's medical care ratio, or the percentage of premiums paid out in benefits, rose to 89.9%, which is up from 85.2% last year. And while it's the highest in 5 years, it is still better than what the analysts expected at 90.7%. And if you watched my previous video on Molina Healthcare, their medical care ratio actually rose to more than 92%, which can potentially indicate that UnitedHealth is doing better than their competition. Another bright spot is their forward guidance. UnitedHealth raised its 2025 adjusted earnings forecast from $16 to $16.25 per share, which is signaling management's confidence that cost pressure are starting to ease. On top of that, adjusted EPS came in at $2.92 for the quarter, topping analyst estimates of $2.80, and revenue grew by 12.2% to $113 billion, which was also above expectations. But even with this, a bit more positive outlook, the stock is still down almost 30% this year, while the S&P 500 is up nearly 17%. So on the surface, from UnitedHealth's earnings, it seems like they're doing the right things to rebound, and the situation isn't as bad as analysts feared. But let me show you their financials so you can understand why I like the company. So as you can see, UnitedHealth is currently trading at $367. And even though it has rebounded from under $250 in August, it's still far away from its all-time high of around $600. They are trading at around 16 price-to-earnings ratio with a forward PE of 23, signaling that there will be harder times next year. They have this beautiful return on invested capital of over 16%, and their net debt to EBITDA ratio is around 1.5, which in my opinion is not great but also not terrible. Now, looking at the revenue over the last 10 years, we see this beautiful growth going from $184 billion all the way up to $400 billion. Looking at their net income, if we ignore this last year's struggles, we see that the growth is even better, as before last year they grew from $7 billion all the way up to $22 billion, more than tripling along the way. Now let's compare it to free cash flow. And as you can see, it's always pretty much similar, with free cash flow outperforming net income just a bit. And this is a thing we like to see. Another good thing is their shares outstanding. As you can see, for the last 9 years, they have been consistently buying back shares, increasing shareholder value along the way. Now, this is what analysts are predicting for the company. For revenue, they expect it to continue growing every year for the next 5 years, going all the way up to $543 billion. While the growth is not huge, it's still around 6% annually. Now, looking at earnings per share, we see this dip in the next few years, but expectation to normalize by the year 2029. And as for free cash flow, we also see a similar picture. So after looking at UnitedHealth's numbers, the fundamentals remain solid. The company has strong return on invested capital, which shows that they use shareholder money efficiently. They're also producing beautiful growth on both top and bottom lines. They're doing consistent share buybacks that strengthen long-term shareholder value. And according to analysts, UnitedHealth is expected to fully rebound in the next 5 years, which could could turn the recent weakness to an opportunity for patient investors. However, strong fundamentals do not always mean that the stock is undervalued. So let's put the numbers into my intrinsic value calculator to find out if UnitedHealth is actually a buy today. Alright, let's type in their ticker symbol, which is UNH. Let's get the current price, and let's do two calculations, one from the free cash flow perspective and one from earnings. And let's start with earnings. In the last 12 months, UnitedHealth did $23.09 in EPS. And according to analysts, they'll grow their EPS at around 2 to 3% for the next 5 years. But let's be more pessimistic and let's say that their rebound will take a bit more and they will not grow their earnings for the next 5 years at all. So let's give them a 0. And let's say that for the 5 years after that, they will grow their EPS at 5% annually. Keep in mind, they usually grow it at double-digit rates. Now let's do a standard annualized return of 10%. And for the terminal multiple, let's also give them the market average of 15. Let's click calculate. And as you can see, with these fairly pessimistic assumptions, for a 10% annualized return over the next decade, the stock seems a bit overvalued, as the intrinsic value is 320, but the stock is actually trading at 365. So let's adjust the expected return to 8% and see if it could deliver that. And as you can see, the price is pretty much there. Now let's adjust the numbers to less pessimistic ones. Let's say that for the next 5 years they will grow at 2%, just like analysts predicted, and for the 5 years after that, they will start growing at 10%, which is closer to their actual growth rates and still even a bit lower. Let's click calculate, and for an 8% annualized return, we see that it's fairly undervalued. So let's adjust it to 10, click calculate. Still undervalued. 12. Okay, now overvalued. So that means you could probably expect around 11% annualized return from the EPS side according to these calculations. Now let's do a free cash flow calculation. For the last 12 months, UnitedHealth's free cash flow was around $27.39. And let's keep these numbers all the same and click calculate. And as you can see, it seems fairly undervalued for an 11% annualized return. Let's see if it could return 14%. And as you can see, with these fairly normal assumptions from the free cash flow perspective, you could probably expect around 14% annualized returns over the next decade, as the intrinsic value is pretty much the same as the current market price. So to sum everything up, UnitedHealth has delivered a decent quarter for a turnaround. On top of that, their financials still look healthy. However, after running my intrinsic value calculation, it no longer seems like UnitedHealth can deliver those 20% annualized returns that we projected in the previous analysis. And that's understandable, as the stock has climbed more than 50% since my last video 3 months ago. Back then, it was trading under $250. And was exactly the time I bought in. So while the potential upside has definitely shrank, UnitedHealth could still deliver between 8 and 12% annualized returns over the next decade, which in my opinion are still fairly solid numbers. Now, what am I doing at today's price? I am not buying more, but I'm also not selling. In my opinion, it is still a good business, just not as undervalued as it was before. But if you're interested in other opportunities in the healthcare insurance sector, I just did a video on Molina Healthcare, another stock struggling with the same issues, and in my opinion, the potential returns there look far more attractive. You should be able to see the video somewhere on the screen or in the description down below. Now, if you enjoyed this video, consider clicking the like and subscribe buttons. And as always, guys, thank you for watching, and I hope to see you in the next one. Bye.